Hey everyone, and welcome back to Investing Talk podcast. My portfolio could really use a little holiday magic right about now. It's a little sprinkle of that Santa Claus rally cheer you hear about every year.
Yeah, the market has been kind of a Grinch lately, so I think we could all use a little bit of that end-of-year boost,
Yeah.
especially in sectors like tech.
Exactly. And speaking of tech, have you seen what's happening in the world of robotics? It's absolutely exploding. So today we're going to look at Symbotic, ticker symbol SYM, a company making some pretty big waves in warehouse automation. I'm talking about those futuristic systems with robots zipping around and fulfilling orders at lightning speed.
Yeah, it's not science fiction anymore. This is happening right now. And Symbotic is right at the forefront of it, changing how companies like Walmart manage their entire supply chain.
Okay, so let's unpack this. Symbotic's revenue growth in fiscal year 2024 hit a whopping 55%. I mean, that's not just growth, that's a full-on sprint. In the last quarter alone, the revenue was $577 million, up 47% from the same time last year.
Those are some serious numbers.
Yeah.
Just to put that into perspective, the average machinery company is growing at about 8.8%. Symbotic is leaving them in the dust.
Right. It's like they found a secret shortcut in a market that's already booming. The entire robotics market is expected to reach $74 billion in 2024. But here's the question that's probably on everyone's mind. If Symbotic is doing so well with growth, why aren't they profitable yet?
That's the million-dollar question, isn't it? And it's definitely one we need to address. While they're not profitable on a net income basis, their adjusted EBITDA is looking much healthier. In Q4 of 2024, it was $55 million, compared to a measly $13 million the year before.
Okay, so think of EBITDA as kind of a rough measure of profitability. Yeah. Stripping away some of that accounting noise. It's not the whole picture, but it's a pretty good sign that things are moving in the right direction.
Exactly. And analysts are predicting that they could break even next year, 2024, and even hit $161 million in earnings in 2025. Now, whether they hit those targets remains to be seen, but the potential is definitely there.
But potential doesn't always translate into results. What makes you think Symbotic can actually pull this off?
Well, for starters, look at who is backing them. SoftBank Group, a major player in tech investing, holds almost 47% of Symbotic's shares. They were a key part of taking the company public. And then you have Walmart not just investing, but actually using Symbotic systems in all 42 of their U.S. regional distribution centers.
Wait, so Walmart is putting their money where their mouth is? That's a pretty big endorsement.
It's huge. Walmart owns about 14% of Symbotic. That's about 15 million shares. They're not just betting on Symbotic financially, they're entrusting their entire U.S. distribution network to them and to this technology. That's a massive vote of confidence.
That's a really good point. It's one thing to have investors believe in your future, but when a retail giant like Walmart goes all in on your technology, that speaks volumes.
And it's not just Walmart. Other major players like Bailey Gifford, who owns about 13%, and Vanguard Group, with over 3%, are also on board. This isn't just about the money, it's about the trust and validation that comes with those big names backing Symbotic.
So we've got big-name investors and a retail behemoth as a customer.
Mm-hmm.
But who else is buying what Symbotic is selling?
This is where things get really interesting. Aside from Walmart, Symbotic systems are being used by Target, and they're expanding beyond just the retail giants with Albertsons companies. A major grocery chain is implementing their automation. And let's not forget about C&S Wholesale Grocers, one of their earliest adopters.
Wow, this is like a who's who of the retail and wholesale world. It's clear that their technology is gaining some serious traction in the market. But hold on, didn't Symbotic hit kind of a rough patch recently? Didn't their stock take a bit of a tumble?
You're right. In late November, their stock price plummeted nearly 40%, closing at $24 a share. Ouch, that must have hurt. It was triggered by a couple of things. First, some financial reporting errors surfaced, which always kind of shakes investor confidence.
Yeah, transparency and accuracy are super crucial when it comes to financial reporting. Even small errors can really spook investors.
Absolutely. And then to make matters worse, Symbotic lowered their sales forecast. Not exactly the news investors were hoping for.
So was this just a temporary stumble, or is there something more concerning going on? I mean, a 40% drop is a pretty steep fall.
That's the question, isn't it? Was this just a stumble or a sign of some deeper trouble? Well, the good news is that most analysts seem to think that those issues are temporary. Symbotic's management is actively addressing those operational hurdles, and trying to regain investor trust. What's encouraging is that they're increasingly focusing on software subscriptions and support services, which should lead to a more stable and long-term revenue stream.
That's a smart move. Recurring revenue is kind of like the gift that keeps on giving, right? It can provide a much more predictable and reliable income stream than one-off sales.
Exactly. And, it aligns with that broader trend of software as a service, or, SaaS, as they call it, which is becoming increasingly popular across a lot of industries. But here's the thing. A lot of companies are claiming to be SaaS these days. What makes Symbotic any different?
Yeah, that's a really good question. I mean, what's their secret sauce? Is it just the software, or is there something more?
It's definitely more than just the software. What sets Symbotic apart is that they're offering a complete system solution. They're not just providing robots, they're also integrating software data analytics and the entire infrastructure. It's about tailoring that solution to each client's very specific needs, which can be quite complex.
So it's like they're not just selling the robots, they're selling like a whole ecosystem.
Precisely. They're creating a symbiotic relationship between their technology and the client's operations. I guess hence the name.
Oh, that's clever. It sounds like they're aiming to be more than just an automation company. They want to be like a true tech partner, a problem solver. That's a different ballgame.
It really is. And that requires a really deep understanding not only of robotics, but also logistics, supply chain management, and data analytics.
So they kind of need a team of engineers, data scientists, and logistics experts all working together. That sounds like a lot of moving parts.
It is, but it's what's needed to create a truly integrated solution. And if Symbotic can pull it off, the potential is pretty enormous.
Yeah, so far their track records suggest they're on the right track. We've talked about their impressive growth, their blue-chip clients, and the backing they have from those major investors. But let's be honest here. There are some risks. We talked about the recent stock price volatility, the financial reporting errors, and the lowered sales forecast.
Right. You're absolutely right. There are always going to be risks, especially with a company as young as Symbotic. And, it is operating in a rapidly evolving industry. There's going to be competition, new challenges, and, the possibility of some unforeseen disruptions. That's the nature of any emerging technology sector.
But that's also where that potential for big returns lies.
Absolutely high risk, high reward. It's all about, carefully weighing those risks against the potential upside.
So for those investors who like to live a little bit on the edge, Symbotic might be worth taking a closer look at.
Maybe. But even if you're not quite ready to jump into SYM stock just yet, I think it's just fascinating to see how this industry is evolving. Speaking of which, what are some of the key trends driving the robotics industry forward?
Well, you and I both talked about the explosive growth. And I think one of the biggest drivers is that robots are becoming much more affordable and easier to use.
Right. They're not just those massive, expensive machines anymore. We're seeing, smaller, more collaborative robots or cobots, they're designed to work alongside humans.
Exactly. And those cobots are pretty user-friendly. They don't need a ton of programming or training. We're seeing them pop up everywhere in manufacturing, in healthcare, even in retail.
And then, you have artificial intelligence or AI. It's like giving robots a brain boost.
Yeah, AI is kind of like the brains behind the brawn. It's making them smarter, more adaptable, and able to handle more complex tasks. It's almost like they're learning on the job and getting better every day.
It is. AI allows robots to learn from experience, to adapt to those changing environments and, make decisions in real time. That opens up a whole new world of possibilities.
It's mind-blowing. And it's not just about efficiency and productivity. Robotics is also helping to address labor shortages, to improve workplace safety, and even lead to new forms of innovation.
Absolutely. Robots can take over hazardous jobs, work in those really tough environments, and handle repetitive tasks that would be really difficult or even dangerous for humans. And that frees up people to do more creative and more fulfilling work.
It's not about robots replacing humans. It's about robots working with humans, augmenting our capabilities and helping us achieve more than we ever could on our own.
I think that's a really crucial point. The future of work will likely involve a very close collaboration between humans and robots.
And companies like Symbotic are really at the forefront of this evolution. They're building these really sophisticated systems that can integrate with human workflows. It's making us more efficient, more productive.
And hopefully happier and more fulfilled in our work.
That's the dream, isn't it?
Yeah.
To have technology enhance our lives, not just automate them.
But let's address the elephant in the room here. What about the societal impact of, widespread automation? What happens to jobs as robots become increasingly capable?
That's the big scary question, right? Are robots coming for our jobs?
There are definitely valid concerns about job displacement. The widening gap between skilled and unskilled labor and the potential for, increased economic inequality. We can't ignore those concerns.
Absolutely not. we need to address those challenges head on. It's really crucial that we invest in education and training programs that can help workers adapt to this changing world.
We need to really focus on reskilling and upskilling. Equip people with those skills they're going to need to thrive in a more automated future.
And, those skills aren't just technical. It's also about critical thinking, problem solving, creativity, and adaptability, the things that robots can't do.
Exactly, because even the most advanced robots are just tools. They need human guidance, human ingenuity, and human empathy to be truly effective.
It's about finding that balance between harnessing the power of automation and making sure it benefits everyone, not just a select few.
That's a conversation we really need to keep having as robotics continues to advance.
It's a conversation that's going to shape the future of work, the economy, and ultimately our society. But hey, on a lighter note, remember what we talked about at the beginning? The Santa Claus rally.
Yes. A little holiday magic for our portfolios. Could Symbotic benefit from that end-of-year boost?
Well, let's talk about that in our final segment. Stay tuned, folks. We'll be right back. Welcome back to Investing Talk Podcast. We spent this episode really digging into Symbotic, ticker symbol SYM. This company is trying to revolutionize warehouse automation. They've got some really impressive growth, big-name clients, and even bigger ambitions. But the big question is, are they a smart investment?
Yeah, that's what everyone wants to know, right? And to be honest, there's no crystal ball here. But I think what we can do is look at the potential upside, and the very real risks, to help you decide whether or not SYM belongs in your portfolio.
All right, so let's start with the good stuff. We've seen their revenue just skyrocketing, and they've managed to snag some seriously impressive clients. Plus, the whole robotics sector is on fire right now.
It really is. If Symbotic can deliver on their promises, reach profitability and keep innovating, well, their stock could take off like a rocket. I mean, just imagine if they become the go-to solution for warehouse automation, not just in the U.S., but globally.
Okay, but let's not sugarcoat it. There's some yellow flags here, too. That stock price plunge in November was a real gut punch. The financial reporting errors, the lowered sales forecast, those aren't things investors take lightly.
No, they're not, and those concerns are completely valid. Management needs to address those issues head on. They need to prove they can get things back on track. The upcoming earnings reports are going to be really crucial. Investors will be watching those numbers like hawks.
So performance is obviously going to be key, but what else should potential investors be thinking about?
Well, the competition. The robotics and automation space is getting really crowded these days. You've got established companies and scrappy startups all fighting for that same market share. Symbotic needs to stay ahead of the game, not just with their technology, but with their customer relationships. And, their ability to show that real tangible value.
So it's not just enough to be a first mover. You've got to be a fast mover, constantly innovating and proving your worth.
Exactly. And don't forget about the bigger economic picture. There are signs of a slowdown in some sectors, and interest rates are creeping up. That could impact Symbotic, especially if their clients start to tighten their belts and cut back on spending.
So even if Symbotic does everything right internally, those external factors could still throw them off course.
Yeah, it's definitely a risk. And then you have that whole Santa Claus rally thing we talked about. Sure, that end-of-year optimism might give SYM a bit of a short-term boost, but I think savvy investors need to look beyond the hype and focus on the long game.
Right, it's all about separating the sizzle from the steak. So after all of this, what's the verdict? Is SYM a buy, a hold, or a sell?
Well, if I had that answer, I'd be sipping margaritas on a beach somewhere. But seriously, investing isn't about, blind recommendations. It's about doing your homework, understanding the company, weighing those risks and rewards, and making a decision that fits your own goals and your own risk tolerance.
That's the bottom line, folks. Symbotic is a fascinating company. You're operating in a really transformative industry. They have a compelling growth story, but they also have some challenges to overcome. Whether or not they're the right investment for you is a decision only you can make. Do your own research. Trust your gut. And remember, no investment is a sure thing.
Investing is a journey, not a destination. Stay informed, stay curious, and never stop learning.
Couldn't have said it better myself. And on that note, we'd like to thank you for tuning in to Investing Talk Podcast. If you enjoyed our deep dive into Symbotic, please do us a favor and subscribe to our channel, leave a comment with your thoughts on SYM, and share this episode with your friends.
Until next time, happy investing.